If you're active duty military or a veteran and you've heard about something called the VA funding fee, this video is for you. For a lot of buyers, this is the moment where they think, okay, what's the catch? So I want to walk you through the VA funding fee in plain English. What it is, why it exists, and how much it is. How putting money down affects it, and when you may not have to pay it at all. Let's start with the basics. What is the VA funding fee? The VA funding fee is a one-time fee charged by the Department of Veterans Affairs. It is not a lender fee, it is not interest, and it is not paid monthly. The purpose of the VA funding fee is to help keep the VA loan program running without relying on taxpayer funding. In simple terms, it helps ensure the VA loan benefit is available for future veterans. Now let's talk about how much the VA funding fee actually is and how it's calculated. The funding fee is calculated as a percentage of the loan amount. That percentage depends on three main factors: whether this is your first VA loan, whether you've used a VA loan before, or whether you're putting any money down. For most first-time VA buyers, putting zero down, the funding fee is at its standard level. But here's where a lot of people miss an important detail. Putting money down can actually reduce the funding fee. Funding fee discounts with 5% and 10% down. So if you choose to put money down, the VA discounts the funding fee. Putting at least 5% down reduces the funding fee to 1.5%, and putting at least 10% down reduces it to 1.25%. So the more you put down, the lower the funding fee. This is important because it gives you options. For some buyers, zero down still makes the most sense. For others, putting 5 or 10% down can lower the funding fee enough to make the overall loan structure more efficient long-term. This is why VA loans are not one size fits all. They're flexible by design. Now let's talk about how the VA funding fee is actually paid. Can the funding fee be financed? In most cases, the VA funding fee can be financed into the loan. That means you don't have to write a check for it. It's not included in your closing costs. Instead, it's added to the loan balance and paid over time. This is one of the reasons VA loans work so well for buyers who want to preserve cash. That said, financing the funding fee does increase your loan balance, which means you'll pay interest on it over time. This is a bit of a trade-off, and it should always be explained before you decide. Now here's the most important part of this entire conversation. Who is exempt from the VA funding fee? So many veterans do not have to pay the VA funding fee at all. You may be exempt if you receive VA disability, you're eligible for compensation but receive retirement pay instead, or you're a surviving spouse eligible for VA loan benefits. If you qualify for an exemption, the funding fee is completely waived, and this is not something that should be discovered once you're under contract. In most cases, we can see this on your certificate of eligibility or your COE. A knowledgeable VA lender checks this early so there are no surprises. Now let's put the funding fee into proper perspective. So there's the funding fee versus other loan costs, and a lot of people fixate on the funding fee without comparing it to other loan costs. With conventional loans, buyers often pay PMI, private mortgage insurance, and PMI can be paid monthly, upfront, or even financed into the loan. And PMI protects the lender, not you. The VA funding fee supports the VA loan benefit itself, not you. This is why it's important to look at the total cost of the loan, not just one line item. So let's address the real underlying question. Is the VA funding fee worth it? And the honest answer is it really depends. For veterans who are exempt, the VA loan is often a clear win. For others, we compare the VA funding fee to things like PMI, interest rate differences, and cash to close. The goal isn't to avoid a fee. The goal is to choose the structure that best fits your situation. So let's land the plane here. The VA funding fee is not a penalty. It's not a surprise charge, and it's not something to be afraid of. It's simply part of how the VA loan program stays available for the people who earned it. When you understand how it works, how putting money down affects it, and whether you're exempt, you can make confident decisions without unnecessary stress. If you're active duty or a veteran, using your VA loan wisely means understanding all the moving pieces, not just the headline benefits. In future videos, I'll break down topics like VA entitlement, VA appraisals, and common VA loan mistakes, so you can go even deeper. If you're looking for clarity around VA loans, you're in the right place. If you're using a VA loan and want to understand how the funding fee applies to you, text FEE to 301-332-1589 and I'll send you a clear breakdown.